Good afternoon, everybody. This is Trey getting back in touch with you from Japan. Today, literally, the house like 5 feet away from me is being ripped apart. So, to avoid the noise, I'm going to be filming during lunch. And after this, I'm going to put together a pizza for my family for dinner. Today, we are looking at American Express, AXP. We've been going through a series of various other credit card companies. Today, I wanted to share a little bit about why American Express is a little bit unique and a little bit special, and maybe if we should invest in it moving forward here or not. Let's dive in. For me, growing up, I never really understood what was special about American Express, and it seemed like it was very niche and very limited, and indeed that was on purpose. It turns out American Express has put a lot of their focus throughout their history on just targeting business people and companies to be, their corporate card, their business card. The reason that's really good for them is because if you were, traveling around the world or traveling around the country as an executive for your company, your biggest concern when you're spending is probably not the price. Your biggest concern is just speed and convenience. And that works out really nice for credit card companies like American Express, because if you have people spending a lot of money and you get to keep a small percentage of that spend, then your sales are going to be really high. In kind of the last 10 years, American Express has started to put more energy and more effort into being a little bit more high-tech, being a little bit more available, and also being in more pockets rather than just business people. And indeed, one of American Express's biggest advantages is its relationship with companies. They claim to have relationships with around 60% of Fortune 500 companies. And so, if all of your clients are all super rich companies and they're all sending people all over the place for business travel, booking hotels, getting taxis, buying food on the go, and you get a little percentage of that all the time, that's pretty dope. And if you're a frequent traveler, you've heard about lounges. Just super nice places to chill in the airport while you're waiting for your flight. Maybe grab a meal, have a shower. American Express apparently boasts the most executive lounges, and they also have 7 Centurion lounges, which are the Ferrari of lounges apparently around the world. And if you're not using American Express, you don't have access to these. And, if you are a business traveler and you like to be pampered and you like to be taken care of and you like to, go in luxury and style and comfort, which admittedly business travel is super tiring, you have a vested interest in fighting for your company when they're making these decisions to say, no, let's not give up the American Express card. Let's keep that. I really need that. Our team really needs that. And that gives American Express a little bit of an advantage over many of the other companies when companies are choosing what kind of corporate card they want to choose. Recently, we've looked at Visa, we've looked at MasterCard, and we've looked at Discover and how their business models all slightly differ. And some of their strengths and weaknesses. And again, after this video, I'm probably going to do a more thorough comparison video of all 4 of these companies. So stay tuned if you're interested in seeing that. If you're enjoying this analysis of American Express so far, if you could take a moment to gently caress that like button until it changes colors, that would help me very much. But yeah, it seems American Express' biggest strength is that focus on company cards, being the company card. On the flip side, especially in comparison to Discover Card, one of the really interesting downsides to having this approach is that corporations are much less likely to carry a balance forward. They'll just pay it off. They'll just pay the card off in full every time, every month, and that means less interest income for American Express. Only about 1/5 of their net revenue is derived from interest income. Another one of American Express's superpowers, especially in comparison to other credit cards, is that they control both sides of the transaction. Usually credit cards will partner with banks and they'll say, hey, we want you to figure out this person's credit worthiness. We want you to distribute this. We want you to market this. We want you to figure out the benefits plans and things like that. And Visa or Discover will go around and try and get work with merchants to try and get their machines or their systems accepted by those merchants, and then they partner together and they each get a little bit of income. They share the income. But American Express has done it differently, which is why I guess when I was younger, why it seemed to be so exclusive, which is changing a little bit now, but we'll get into that in a minute. So American Express controls both sides. of the equation. They do all the marketing, they do all the filtering and sorting and figuring out who gets to use their cards, and they also work with all the merchants. And that gives them a greater share of the income when a transaction is made. It seems like in North America, they have reached a similar level of acceptance as Visa and MasterCard. Internationally, they're growing as well, but they're not nearly on the same level as Visa in terms of international acceptance. In 2019's fourth quarter, the revenue was $11.4 billion, representing a year-over-year growth of 8.5%. That's a big growth. Net interest income growth of 12.4% also continues to help with their growth. In 2019, American Express did a 4% share buyback, and they hope to continue that moving forward apparently. In January and February of 2020, revenue was up 9% compared to 2019, which is surprising. March revenue is expected to drop 6 to 12% from the previous year, thanks to the sickness. And if we look at the entire first quarter, revenue is expected to be down about 2% on a year-over-year basis. Let's take a look at some of the big picture numbers. The current price we are seeing is about $100, $102. For the 52-week range of the stock price, we see a range of $67 all the way up to about 140, just under 140. So that suggests we are right around in the middle. And we'll look at the charts again in a minute. The GAAP EPS for the first quarter was 41 cents with a price earnings of 15.29, with a forward price earnings of 14.26. This suggests that it is moderately priced. We're seeing PE ratios go bonkers right now as the stock market inexplicably goes crazy. I think it's because of fear, because people don't really know what's coming and they want to hedge against inflation because the government's printing so much money and stuff like that. But this company's PE isn't that bonkers. A lot of other companies are quite bonkers. Quarterly dividend of 43 cents with an annual dividend of $1.72. This leads to an annual dividend yield of 1.7%, which isn't quite up to where Discover was, but is much better than MasterCard and Visa. Let's take a look at the price charts. Here is the 3-month price chart going all the way back to March. We get to see the tail end of the Krizash, and it's kind of been wavy, kind of bumpy coming back up. It's not kind of smooth. It's kind of like up to 90, down to 80, up to 100, down to 80 kind of thing. Let's zoom out a little bit. Let's look at the 1-year chart. We see, just as most companies were affected, late February, going into March, the big crash. But if you look before that, kind of a really solid, range, 120 up to 138 kind of thing, which is one of the hallmarks of American Express's stability. And let's zoom out one more time to the 5-year chart. You see that 2016, we were down at kind of like 60-ish bucks, with a kind of a smooth slide all the way up to the high, right before the big dip. We're seeing a good amount of rebound, and similar to Discover, it hasn't rebounded all the way up yet. MasterCard and Visa, on the other hand, are have maybe even surpassed their high, which is concerning. This suggests that American Express is slightly out of the spotlight and isn't one of those default companies that everybody runs to just go put their money in because it'll be safe. But on the other hand, because it's not one of the ones that everybody puts all of their money in, we don't see, these price earnings ratios going bonkers either, which could be a buying opportunity for us. So where do I think American Express will be going in the coming months and years? I think American Express is in a really kind of unique situation where it has a larger grasp on corporate clients than other companies do. It's hard to say if that's going to be able to keep growing, but it's also safe to say that that's probably not going to change that much. I mentioned earlier they have partnerships with 60% of Fortune 500 companies. Maybe that could go up to 70 or 80. We're not sure yet. It's hard to tell. One of the big threats we see coming towards American Express is that, they call it front of wallet. When you open your wallet and you have a bunch of credit cards, is American Express in the front? Is that the one you're going to be using? And if it is, then American Express is going to get a little bit of that transaction value. With smartphone payment systems and crypto and things like that kind of on the rise, especially during, the sickness right now, I think it's important for all these companies to be fighting to be the front of mind or front of wallet. It's really tricky because a lot of credit card companies are offering like really nice rewards programs or mileage programs or things like that. And when you open your phone or your wallet, so to speak, to choose which way you're going to be paying for something, especially online, more and more people are starting to think, oh, if I use this credit card, then I can get more rewards. If I use this credit card, I'll be able to go to Hawaii sooner, kind of thing. And American Express hasn't really been pushing that until recently. And so when you have your corporate clients who are going on business trips, they're kind of like, yeah, I gotta use the American Express card because my company will pay for it then. But for the average client who's not a business person, how can American Express fight to be the one that's chosen in every transaction or in most transactions? They're needing to make some changes and make some shifts to appeal to the average everyday person. And they're also putting a greater emphasis on kind of rewards programs and stuff like that. But the difficulty with that is, when you're appealing to more average people, you're also taking on a greater risk because the average person isn't always going to pay off their balance, and therefore the average person is also much more likely to default or go bankrupt or not be able to pay you back what you loaned them with your credit card. And so there are negatives associated with that as well. 40% of American Express's assets are credit card loans, and 30% of its assets are in credit card receivables, which are likely to be paid back. And so if you go in and you start raising the risk level of the people you're making credit card loans to, or giving access to your credit card, and they're less likely to be paid back, then you're taking on some risk. Management is also very aware of the fact that they need to start stepping up their game in terms of being on the front of the wallet or the front of the cell phone to be used more often and chosen over other credit cards. So, am I going to go out and buy American Express right now at this moment? I personally I'm not like super in love with it. And, as I was mentioning earlier, because of the sickness, we're getting all this crazy madness in the market. Personally, I'm not about to rush out and throw a bunch of money into anything, probably, unless I see like a really, really appealing opportunity. American Express isn't quite back to its all-time highs yet, but it's also a little bit tricky to try and figure out exactly how COVID is going to be weighing down incomes and things like that, especially since a lot of their income comes from these business people who are traveling, and traveling is just really hard right now. But on the flip side, if you're thinking more, 5 years, 10 years down the line, and you just want to be able to put your money in a company that offers a slightly higher dividend than some of the other credit card companies, and you want a place that's, not going to be a lot of drama. We saw their 5-year price chart is pretty steady. Not a lot of Tesla-like spikes or anything like that going on. It might be a good choice for you to put some money and just forget about it for 5-10 years. It'll grow, and the dividend will help it grow. So I think I'm personally not going to go heavy into it, but I think it's not a terrible selection if you are into the long-term stability of it. Those are my thoughts about American Express. Hopefully coming up, I will be switching into other sectors. I'm thinking about retail, and I'm also going to be doing some more comparisons between all the companies. So let me know if you have any thoughts or questions or concerns or fears or requests. I'm going to go get ready to make my pizza, and I'm going to make sure to put pineapples on it for you. Looking forward to seeing you soon. Have a great day.